Bank of America reported strong Q2 results with earnings of $7.4 billion, a 21% increase year-over-year. All business segments performed well, and the bank saw solid organic growth and operating leverage. The CEO highlighted the strong performance of global markets and investment banking teams. The bank also emphasized its focus on digital progress and customer engagement, with continued growth in digital users and adoption of digital tools. Bank of America expects to see strength in net interest income and plans to decrease expenses while continuing to invest. Overall, the bank is positioned for continued organic growth and operating leverage. Bank of America generated $7.4 billion in net income for Q2, resulting in 88 cents per diluted share. The bank experienced a year-over-year revenue growth of 11%, driven by a 14% increase in net interest income and a strong 10% rise in sales and trading results. However, there were some headwinds, including lower service charges, reduced asset management and brokerage fees, a net DVA loss, and securities losses. Despite these challenges, the bank remains focused on managing expenses and maintaining a strong balance sheet. Bank of America expects stable net interest income, NII, in the third and fourth quarters, with a potential improvement in 2024. Expenses for Q2 were $16 billion, down $200 million from Q1, and the bank aims to further reduce expenses in Q3. Net charge-offs increased by $62 million, driven by credit card losses. Consumer banking earned $2.9 billion, while wealth management earned slightly less than $1 billion. Global banking produced strong results with earnings of $2.7 billion, and global markets had another strong quarter with earnings of $1.2 billion. All other segments showed a loss of $182 million. During the earnings call, Bank of America mentioned that they are seeing stability and a more balanced deposit mix. While tax payments affected wealth management deposits in Q2, there is a sense of stabilization in deposits overall. They also noted that their loan-to-deposit ratio is low, indicating that they don't need to aggressively chase rates for deposits. However, they didn't provide any specific details on the future mix of their deposit base. Bank of America mentioned that the normalization of credit, specifically in card losses, is progressing gradually. They noted that 90-day past dues have only marginally increased. This indicates that consumers still have plenty of cash and the economy is holding up well. However, no further details were provided regarding other factors to consider when thinking about credit normalization. Bank of America experienced a gradual normalization of credit, particularly in card losses, indicating a healthy consumer and economy. The bank mentioned stability in fee areas such as card and deposit service charges. They also addressed the increase in interest-bearing deposits with the Fed, which was done strategically during an extraordinary period but is expected to decrease as the environment normalizes. The bank emphasized its digital progress and efforts to improve efficiency, aiming to reduce expenses and achieve operating leverage. For detailed summary and more features, go to earningsdigest.ai. Click subscribe to stay updated on earnings results of all major public companies.